Welcome to Yahoo Finance Sports Report, a unique look at the business of sports, brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'm here to coach you through the financial game. We'll look beyond the headlines, analyze all the latest sports news, the teams, trades, and billion-dollar deals, so you and your portfolio will win big. Let's huddle up and get right into it. We're kicking off this week with Pomp's Playbook, where I take a look at some of the biggest headlines in sports that you and your portfolio need to know. First, I'm talking about the NBA's postseason bonuses. The NBA playoffs are in full swing, and the league's best teams are set to earn a little extra cash for their efforts. You see, NBA contracts are paid out over 12 months and only include the regular season, which means players earn bonuses for the playoffs. This year, players will split $34.7 million in playoff bonuses, which come from a playoff pool funded by the NBA's basketball-related income, otherwise known as BRI. These payments include bonuses tied to regular season standings, like the Oklahoma City Thunder, who earned $869,000 for having the best record in the NBA this season. Teams with the best records in the Eastern Conference and Western Conference, the Cleveland Cavaliers in the East and the Thunder in the West, also earned $761,000 each. And the rest of the bonuses are based on how far teams go in the NBA playoffs. This season, first-round teams will each earn around $466,000. Semifinal teams will make about $568,000 per team. Conference final teams will get roughly $951,000 each. The NBA Finals runner-up will get $3.8 million, and the NBA champion will earn $8.8 million. The 15 players on each playoff roster then divide this payment equally, so each player on this year's NBA champion will earn at least $720,000 when you add up each playoff round bonus. So remember that a six-figure bonus is on the line for players this postseason, not just NBA championship glory. Next, I'm recapping WWE's massive weekend for Wrestlemania 41. The Super Bowl of professional wrestling took place this past weekend at Allegiant Stadium in Las Vegas, where WWE drew nearly 125,000 fans for the two-day event. WrestleMania 41 continued WWE's shift to holding the marquee event in football stadiums versus indoor arenas, which the company has done since 2007. Last weekend was also the sixth time WWE has held WrestleMania over 2 days, turning it into an event that looks more like a Formula One weekend. Furthermore, the WrestleMania weekend included the WWE World Fan Fest at the Las Vegas Convention Center, Friday Night SmackDown at T-Mobile Arena, the WWE Hall of Fame ceremony that same day, and Monday Night Raw the night after WrestleMania, which also took place at T-Mobile Arena. All told, WrestleMania 41 is projected to generate $215 million in economic impact to Las Vegas. The event also served as a promotional opportunity for TKO Group Holdings, the publicly traded company formed in 2023, which owns WWE, the UFC, and other sports assets. TKO synergies were on full display throughout the weekend, with UFC President Dana White narrating the event's cold open on night one and attending the event ringside with former UFC middleweight champion Israel Adesanya. TKO also mixed in significant business moves when WWE announced the acquisition of leading Mexican lucha libre promotion, AAA, on Saturday's WrestleMania Countdown show. Now, we look ahead to WrestleMania 42, which is set to take place in April 2026 at the Caesars Superdome in New Orleans. Last up, I'm looking at the future of Red Bull Formula One driver Max Verstappen. Last Friday, a report from Italian news outlet La Gazzetta dello Sport said that Aston Martin is preparing to offer Verstappen a 3-year, $300 million deal to join their Formula One team. This deal would reunite Verstappen with former Red Bull Chief Technical Officer Adrian Newey, who joined the Aston Martin F1 team this year as its managing technical partner. And while there's no denying the potential impact Verstappen could have for Aston Martin on the track, the four-time drivers' champion could have an even bigger impact for Aston Martin off the track. You see, Canadian billionaire Lawrence Stroll doesn't just own the Aston Martin Formula One team. He is also the majority shareholder of the publicly traded Aston Martin car company. And even though Aston Martin's stock is down more than 80% over the past 5 years, Stroll is hoping the company's Formula One team can lead to a resurgence via an increase in road car sales. For example, although Aston Martin finished 7th in the 2022 Formula One team standings, Stroll said that 70% of Aston Martin's revenue that year was attributed to its Formula One team. So, if Verstappen could propel Aston Martin to the top of Formula One, then his success could potentially drive even more revenue for Aston Martin's luxury car sales. Signing Verstappen would be a $300 million bet from Aston Martin, but if it succeeds, the move could pay off massively for the luxury automaker. This week for the Deeper Dive, where I give you a play-by-play analysis of news in the sports world and its significance to your bottom line, we're talking about this weekend's NFL Draft. The 2025 NFL Draft kicks off tonight, and 257 rookies will find out their future NFL homes over the next 3 days. But this year's draft isn't taking place in one of the NFL's top markets, like New York, Los Angeles, or Chicago. It's being held in Green Bay, Wisconsin, the home of the Packers and the smallest city of any NFL franchise. The NFL's choice to host the draft in Green Bay this year was puzzling to many fans. Why would the league hold one of its largest offseason events in a cold weather city with a population of just under 110,000 people? Well, the answer comes down to the NFL's relatively new business model for the draft. After holding the draft for nearly 50 years in New York City, the NFL began rotating the event between multiple cities in 2015, starting with Chicago, then moving on to other locations like Dallas, Nashville, Kansas City, and most recently, Detroit in 2024. The NFL implemented this rotation as a way to give cities that won't ever host a Super Bowl a chance to hold one of the biggest events on the league's calendar. You see, the NFL has strict rules for a city to host a Super Bowl. Stadiums need to be in warm weather or enclosed, and the host city has to meet certain requirements for parking, practice facilities, hotels, event spaces, and other amenities. It's because of these very requirements that many places like Los Angeles, Atlanta, New Orleans, Arizona, Miami, and Tampa serve as repeat hosts for the Super Bowl. They check every box the NFL requires with ease. Now, hosting the NFL Draft is not the same as hosting a Super Bowl, but it is still a massive spectacle that draws considerable fanfare and media attention. So, cities like Philadelphia, Cleveland, and Kansas City have been able to host the draft and enjoy the financial benefits that the event provides as a consolation prize for not being able to host a Super Bowl. For example, last year's NFL Draft in Detroit set the league's all-time attendance record for the event, drawing 775,000 people across all 3 days with fans from all 50 states and more than 20 countries. The 2024 draft in Detroit also generated an economic impact of $213 million for the city, and hotel occupancy rates ranged from 74% on the last day of the draft to 92% on night one. Green Bay is also gearing up for a massive event in its Titletown district outside of Lambeau Field. 250,000 fans are expected to attend the 3-day event, and it is estimated to generate $100 million in economic impact for the state of Wisconsin. So these economic boosts are why cities are now competing to host the NFL Draft, which has become a massive bargaining chip for the league. And that's exactly what NFL Commissioner Roger Goodell wants. We've made it to the one-on-one, a conversation where I get to break down news and sports with a key player in the industry. This week, we're talking to Formula E CEO Jeff Dodds. Jeff, thank you so much for joining us today. I think the most logical place to start is if you could just provide us with a business update on Formula E overall. How many races you guys do, how big the business is, and how much it's grown over the last few years.
Yeah, sure, Joe. Thanks for having me on the show. So Formula E is a baby in motorsport terms. We're actually only in our 11th year, so founded 11 years ago. Founded for 3 reasons: to create world-class motorsport event, to accelerate the energy transition, so to get people away from internal combustion engine cars towards electric vehicles, and thirdly, to build a net zero sport from day zero, so to run our events and our entire championship in a net zero way. So 10 years ago, we had exactly 0 fans in the world because we were just starting out. Fast forward to this season 11, sitting here with around 400 million fans around the world, a broadcast audience of around 500 million, and growing somewhere between 20-30% every year. You asked about how many races. Well, we start our racing season normally late in December. We finish in July, and we have around 16 races a year, and that will be across 10 or 11 different locations. And they include places like North America, China, Japan, Germany, UK, Indonesia, Monaco, Mexico, Brazil, etc., etc.
Yeah, so when you talk about a global motorsport, you just mentioned all those races in all these different countries and locations. This is obviously incredibly expensive to put on, and you guys are only 11 years old at this point. And when people look at Formula One or NASCAR or IndyCar or some of the other racing series like MotoGP and things like that, these are established businesses with obviously huge fan bases that have been around for a long time. I assume this is difficult to go from kind of inception to fan base to profitability. Just talk me through kind of how you're thinking about it from a business perspective.
Yeah, look, you're quite right. So 2 of those sports you mentioned, which many of your audience and your fan base will know about, IndyCar and NASCAR. Obviously, they're domestic racing series. So they're traveling across North America to put on those races. You're quite right. We are traveling literally around the globe running a motorsport series. Our fan base, though, is already right up there. So against those you've already mentioned, Formula One will be the biggest fan base in the world for motorsport. MotoGP in second place, and we are not far behind MotoGP already, albeit we're only 10 years old. But we're also owned, or our majority owner is Liberty Global, so part of the Liberty organization. So a huge global organization. And they very much see this as a high growth investment for them. So what they're looking for, Joe, is to own a motorsports asset or a sports asset that they're looking to grow into the long term. So they're very much focused on investing to grow the business. I think, if the data is correct, we're the second most successful sport founded this century, after those pesky people at the IPL, the Cricket League, founded over in India. So the second most successful sport already founded this century. But as you say, 10 years old for a sport is tiny. If you think about many people I talk to, Joe, will talk about UFC as a comparison and talk about that as a new sport. But I've been a big fan of UFC since it started. And I think it's probably already 35 to 40 years old. So whilst that's considered a new sport, compared to us, it's 4 times older than us.
We've got to take a quick break, but we'll be back with more of my conversation with Jeff Dodds right after this. Welcome back to Yahoo Finance Sports Report. I'm your host, Joe Pompliano. I'm here with Formula E CEO Jeff Dodds. I'd love to just double click on Liberty Media for a second, right, and Liberty Global, because I think sports business professionals and people that work in sports have been familiar with Liberty for a long time. They've done various different things, including here in the U.S., owning the Braves and obviously Formula One as well, too. But they've started to become more prominent because Formula One has gotten so much more popular in the U.S. But now they've invested in MotoGP, obviously Formula E. Have there been any synergies across the portfolio of assets that have helped you guys either grow audience share or make the events more profitable?
They're actually, Joe, 2 completely different parts of Liberty. So obviously Liberty will be synonymous with John Malone as the chair and founder of the Liberty organization. But there are 2 Liberty organizations that sit beneath John. There's Liberty Media and there's Liberty Global. Now, Liberty Media, you're quite right, had the Live Nation business, Atlanta Braves, also Formula One. Liberty Global is a very famous and very successful organization, largely with investments in media and telecoms assets around the world. So in the UK, that would be Virgin Media and O2, the telecoms business, and various other investments in telecoms and media around the world. Formula E was one of their first investments in sport. So they're actually both Liberty Media, Liberty Global, both part of the Liberty organization, but they're run as 2 completely separate organizations. So from a synergies point of view, we work completely independently of each other today. 2 different CEOs of those businesses. So no, we're run completely separately, both under the Liberty, as part of the Liberty empire, but run very separately.
That's why I love doing this show, because I learn something new each time. I mean, I just assumed that given they're both under Liberty, there were some synergies there, but the fact that they sit kind of independent and on 2 different sides of the business is fascinating. So that's super helpful context. So thank you. But I'd love to also just talk about the U.S. audience in general, because I think certainly over the last number of years, there's been a larger conversation happening around how important the U.S. market is. And this has been going on for a long time, but given what Formula One did coming to the U.S., a lot of the international sports leagues have tried to replicate that through content and other things like that. But I think most people understand, international leagues are trying to come to the U.S., U.S. sports leagues are trying to go international and vice versa, given that there's larger audiences to be had and more money to be made. How do you think about the most important markets when it comes to Formula E? And then how do you think those will develop over time as the series grows?
Such a big question. We could have 20 minutes on this question, Joe. So first thing I would say is the US is an incredibly important market. If you talk to our manufacturer partners, and that's people like Porsche, Jaguar, Nissan, Stellantis, if you talk to those partners and our big sponsors, they will normally identify 2 places as their 2 key markets for us: North America and China. China, the sheer scale of China and the fact that it's leading the EV transition. So China will be a key market, and the US equally huge market, huge economy, but also a great sports market. So they would normally be earmarked as the 2 biggest markets for us. So this year we'll race in Shanghai in China. We race in Miami, and we've just raced actually in Miami in North America. Now, one of the challenges for a global sport is, unlike NASCAR, unlike IndyCar, as a media property, what we haven't got is 20 to 30 races per year in the same country with the same broadcaster. So our broadcast partners in North America, CBS, but also Roku. We were the very first sport that Roku invested in exclusively for their platform. So of course they're showing all 16 races that we put on around the world, but they're in different time zones, Joe. So that can be quite complex. It's not the same as showing 20 or 30 races in one country, albeit North America has different time zones, but it's not the same as showing that. So we have to be in North America. It's a core market for us. It's a huge fan base and a very fast growing fan base for us. We've just done a race in Miami, but we also just did an event in Miami called the Evo Sessions, which was bringing 11 of the world's most followed content creators, putting them in our cars and creating more digital first content to try and attract a new audience, as a Gen Z or a millennial audience into Formula E. So the market is critical, but it's not so easy to get scale where you only have one race in that market every year. You have to find other ways of continuing to make that a compelling reason for people to view.
I'm 30 years old, so I don't know how much I fall into the social media craze of these things. But next time you do that, I would love an invite to get into a car and drive it around myself, because that sounds awesome. But I would also
it depends
love
how many followers you've got, Joe. Depends how many followers you've got. If you've got
over 1 million on all the platforms, so I think that probably qualifies, I imagine. But I'll wait on bated breath there.
I'll tell you, amongst our 11. They had roughly 250 million followers amongst the 11, and we had a special guest appearance from our great friend Mr. Beast, who has about 350 to 400 million followers in his own right. So add the 11 and Mr. Beast together, we had roughly 500 million followership amongst those people driving the car.
Yeah, I'm just a little bit smaller than Mr. Beast, but that's okay. I'd love to talk about the teams, though, right? Because I don't want to keep comparing Formula E to Formula One, but I think it's a good example because in a lot of ways, the teams are probably trying to do the same things, right? If you think about Formula One, traditionally, yeah, it's a sport, it's for entertainment and things like that. But a lot of these teams have been using the sport as a marketing platform to sell road cars. And my guess is, considering your comments on China and North America being the most popular markets and most important markets for some of these teams, is it's the same sort of strategy just with EVs rather than ICE engines and things like that. I would love to know just how the teams operate, right? And what I mean by that is if you look at Formula One, the operational aspects of the teams have changed a lot from a financial standpoint, where they used to burn a lot of money and it was really just a marketing exercise. But now that they have the cost cap in Formula One, it's created sort of these franchises, or what we would look in North American sports as these teams where they really have enterprise value because they can potentially turn profits depending on how they perform and how many sponsors they sign and things like that. Is it similar to the setup you guys are using in Formula E, or is it different?
It's almost exactly the same, just on a different quantum. So if you look at our teams, so Porsche, Nissan, Jaguar, McLaren, Maserati, DS Penske, Andretti, Cupra Hero. So you've either got pure manufacturer teams, Porsche, Nissan, Mahindra, Stellantis, Jaguar, or you've got customer teams that have a partnership with a motor manufacturer in the same way you'd have an engine manufacturer in Formula One. And they are people, racing royalty, right? Particularly in the US, Andretti have a team, Penske have a team. So you've got this combination. We have a cost cap as well. Our cost cap, though, runs at about $15 million a year, compared to roughly $140, $150 million a year in Formula One. So a fraction of the Formula One cost cap. And I feel pretty proud of that, because if you think about global fan base, Formula One has a fan base of around 800 million fans over the globe. We have around 400 million fans, so roughly half the size and growing quickly. So if you look at the scale of our businesses compared to the investment required to take a team and be part of the ecosystem, we are absolutely looking at teams coming in. They trade in the market, those teams. So teams coming in, establishing themselves on the track, bringing in sponsors, bringing in media partners, and growing in value over time.
Yeah, and if you had to look 5 years down the road, right? Like, sure, we can talk about tomorrow and things like that, but as Formula E CEO, what is the number one goal that if you look back in 5 years and that's the one thing that you accomplished, you'd be happy with?
So look, there's two things. There's 100 things, but there's two I will pick on. So growth is king in this industry. So we are currently riding the tailwind of electrification. So not quite as quickly as people had first anticipated, but we have this kind of relentless growth in electric vehicle sales around the world. One of the other things that will help us to grow faster and close that gap is the car itself. Because if you're into motorsport and you're watching cars race, speed is incredibly important and performance of that car is incredibly important. So as we see this increase in performance of the car with the growth in electric vehicle sales around the world, we have an incredible potential to grow this business to become huge over time. I guess at the moment, what I'm charged with is making sure that whilst that window of opportunity is open, we don't screw it up and we don't miss it.
I love it. Thank you so much for joining us today, though, Jeff.
Yeah, my pleasure, Joe. Thanks for having me.
The clock is winding down here, but we have just enough time for some final buzz. So let's talk about Gatorade's new marketing campaign. Gatorade is pulling out all the stops in its new marketing campaign called Lose More, Win More. The PepsiCo-owned sports drink company kicked off the campaign last Friday with a 1-minute ad starring Grammy-winning rapper Kendrick Lamar. The commercial also features top Gatorade athletes like Caitlin Clark, Luka Doncic, Jason Tatum, Asia Wilson, and Shedeur Sanders, and it will air throughout the entirety of the NBA playoffs. Gatorade will also run the Lose More, Win More ad spots during this week's NFL Draft and the MLB All-Star Game later this summer. The new marketing effort is considered Gatorade's largest celebrity brand campaign in company history, and Kendrick Lamar is the first musician to ever star in a Gatorade commercial. And while the Lose More, Win More campaign is primarily athlete-focused and leans on Gatorade's massive roster of endorsers, the shift to include a non-athlete like Lamar is by strategic design. Gatorade's chief brand officer told Bloomberg that hip-hop culture is a big part of sports culture, and that Gatorade is working to make shifts in how to interact with Gen Z. And this effort from Gatorade to tap into culture outside of sports comes at a time when the sports drink brand is being pushed by multiple competitors. Now, Gatorade still dominates the U.S. sports drink category with a 62% market share, according to Beverage Daily. However, it has seen its market share challenged by brands like Coca-Cola-owned Body Armor, which now holds 12% of the U.S. sports drink market, and launched its own marketing campaign last week, featuring NFL superstar quarterback Joe Burrow and 3-time NHL MVP Connor McDavid. Upstart brand Prime Hydration, founded by YouTube creators Logan Paul and KSI, has also gained a foothold in the U.S. sports drink market and has signed massive athlete endorsers like Patrick Mahomes, Kevin Durant, Aaron Judge, and WWE's Cody Rhodes. But for now, we'll see if Kendrick Lamar can help Gatorade remain the king of sports drinks in an increasingly competitive market. We're all out of time, so it's officially game over for this week. Thank you so much to Jeff and for all of you for joining us. Please make sure to scan the QR code below to follow Yahoo Finance Podcast for more videos and expert insights, and catch us every Thursday wherever you get your podcast. I'm your host, Joe Pompliano. See you next time.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.